Hey there, everyone! Welcome back to our channel, where we break down the essentials of personal finance so you can take control of your money and build a brighter future. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. Today, we're diving into a critical topic that can make or break your financial stability, your emergency fund. More specifically, we'll be answering the question, where should you keep your emergency fund? So, why should you care about where your emergency fund is kept? Well, the answer is simple. The location of your emergency fund can affect how quickly you can access it when you really need it, as well as how effectively it grows over time. So, let's explore some of the best options for storing your emergency savings. First off, let's clarify what an emergency fund is. An emergency fund is a savings buffer that can help you cover unexpected expenses, such as medical bills, car repairs, or even job loss. Financial experts typically recommend having 3 to 6 months' worth of living expenses saved up in this fund. Now, let's look at some of the best places to keep that money. The first option is a high-yield savings account. These accounts often offer interest rates that are significantly higher than traditional savings accounts. For instance, while a typical savings account might yield an interest rate of around 0.01%, a high-yield savings account can offer rates upwards of 3% or more, depending on the bank. Let's say you have an emergency fund of $10,000 in a high-yield savings account with a 3% annual interest rate. After 1 year, you'd earn about $300 just by keeping your money there. Plus, these accounts are usually FDIC insured, which means your money is protected up to $250,000. This makes it a safe and accessible option for your emergency savings. Next, let's talk about money market accounts. These accounts can offer competitive interest rates similar to high-yield savings accounts, and they often come with check-writing privileges and debit cards, making it easy to access your funds in case of an emergency. However, it's essential to note that money market accounts often require a higher minimum balance, sometimes as much as $1,000 or more. So, if you're just starting out with your emergency fund, you might want to consider whether you can meet those requirements. Another option is a certificate of deposit, or CD. CDS typically offer higher interest rates than standard savings accounts, but they come with a catch: your money is tied up for a set period, usually ranging from a few months to several years. Let's say you invest $5,000 in a 1-year CD that offers a 2.5% interest rate. At the end of the year, you'd have earned $125 in interest. However, if an emergency arises before that year is up, you might face penalties for withdrawing your money early. This makes CDS less ideal for emergency funds, but they can be a good option for saving additional funds that you won't need immediately. Now, you might be wondering about keeping your emergency fund in a traditional savings account. While these accounts offer easy access to your funds, the interest rates are typically very low. If you're okay with minimal growth and just want a safe place to keep your money, this could work for you. But remember, keeping your emergency fund in a traditional savings account means that inflation could outpace your interest earnings, effectively reducing your purchasing power over time. So, if you choose this route, be aware of the trade-offs. Finally, let's discuss keeping cash at home. While it's convenient for quick access, stashing your emergency fund under the mattress or in a safe can expose you to risks like theft, fire, or loss. Plus, your cash isn't earning any interest, which means it's not growing over time. So, while having a small amount of cash at home for immediate needs is reasonable, it's better to keep the bulk of your emergency fund in a more secure and interest-bearing account. So, there you have it. When deciding where to keep your emergency fund, you have several options to consider, each with its own pros and cons. High-yield savings accounts and money market accounts strike a good balance between accessibility and growth, while traditional savings accounts and cash at home offer convenience but limited growth potential. And while CDS can provide higher interest rates, they may not be the best fit for quick access. In summary, aim for an option that provides safety, accessibility, and some level of interest growth, so your emergency fund can work for you while still being there when you need it most. Now, if you found this video helpful, make sure to give it a thumbs up and share it with friends who might also benefit from this information. And don't forget to subscribe for more personal finance tips and tricks. What questions do you have about emergency funds? Let us know in the comments below. Until next time, take care and happy saving!